Have you ever wondered why businesses of all sizes, whether a small startup or a major corporation, always seem to know exactly where their money is going? It all starts with a system that's as foundational to accounting as the alphabet is to language: the chart of accounts. If you're a student, professional, or even just someone trying to manage your own finances, understanding how this system works could make or break your financial success. Today, we're diving deep into the structure of a basic chart of accounts, and by the end of this video, you'll know how to organize your financials like a pro. Let me tell you a story. Jane was a small business owner who had big dreams, but was drowning in a sea of receipts, invoices, and confusing financial statements. She couldn't figure out why her business was struggling even though sales were increasing. The problem? Her financials were a complete mess. She didn't have a proper chart of accounts to track her income, expenses, assets, and liabilities. After getting professional help and implementing a solid chart of accounts, she was able to pinpoint exactly where her money was leaking, reduce unnecessary expenses, and finally see her profits grow. This is the power of understanding a basic chart of accounts. Welcome to Education Bench, where we help students, professionals, and anyone curious about finance master essential accounting and financial concepts. If you're looking to boost your financial literacy, ace your accounting exams, or improve your business's financial management, you're in the right place. Be sure to hit that subscribe button and join our community of learners. Let's unlock the secrets of the chart of accounts today. So, what exactly is a chart of accounts, and why is it so important in the world of finance? In its simplest form, the chart of accounts, COA, is a list of all the financial accounts in an organization's general ledger. It helps categorize all financial transactions in a structured way, ensuring nothing falls through the cracks. From students preparing for their exams to professionals managing business accounts, the COA is essential for understanding the financial health of any entity. It's the backbone of financial reporting, allowing businesses and individuals alike to see where their money comes from and where it's going. Let's break down the key components of a basic chart of accounts. Typically, it's divided into 5 major categories. Assets. These are the resources a business owns, things like cash, inventory, equipment, or even prepaid expenses. Imagine assets as the things that will benefit the business in the future. Liabilities. These represent the obligations or debts a business owes. Think of things like loans, accounts payable, or tax obligations. Liabilities are what a business has to pay back in the future. Equity. This is the owner's interest in the business after liabilities are subtracted from assets. It's essentially the net worth of the business. Revenue. This tracks the income a business generates from its normal operations, sales of products or services. It's the fuel that keeps a business running. Expenses. These are the costs incurred to generate revenue, everything from rent and utilities to wages and marketing expenses. Each account is assigned a unique code, allowing easy identification when transactions occur. These codes, usually numerical, help accountants categorize and track every transaction. Let's take an example. Suppose you purchase office supplies for your business. The expense would be categorized under expenses, with a specific account code for office supplies. This way, at the end of the year, you can easily review how much you've spent on supplies and adjust your budget accordingly. But the beauty of the chart of accounts isn't just in organizing transactions, it's in enabling better financial decisions. By looking at the balances in each category, you can determine if you're overspending in certain areas, if you have enough assets to cover your liabilities, or if your revenue streams are meeting your financial goals. Now that we understand the structure, how can you apply this knowledge? Whether you're a student preparing for accounting exams or a professional managing a company's books, understanding the chart of accounts is crucial for accurate financial reporting. For students, practice by creating mock charts of accounts for different types of businesses. This will help you visualize how various transactions fit into the bigger financial picture. For professionals, regularly reviewing your chart of accounts can highlight inefficiencies in spending or areas where you might be over-leveraged. Make sure to customize your COA to fit the specific needs of your business. For example, if your company is service-based, You might have a different set of revenue and expense accounts than a manufacturing company. One question I often hear is, how do I balance all these accounts? The key is that your chart of accounts isn't meant to balance itself. It's a tool that feeds into financial statements like the balance sheet and income statement. As long as your entries in the ledger are accurate and follow double entry accounting principles, your statements will balance. Another question: what's the best way to study for an accounting exam on this topic? My advice? Create practice scenarios. Write out transactions and classify them using a mock chart of accounts. It'll help reinforce the concept and make you more comfortable with the process. For those wanting to take it to the next level, you can customize your chart of accounts to suit the specific needs of your organization. For instance, a tech startup might have accounts specific to software licensing or research and development, while a retail business might have categories for inventory management. The goal is to build a system that reflects the unique nature of your business operations and financial flows. Also, as your business grows, your chart of accounts should evolve too. Adding new accounts for emerging revenue streams or expense categories ensures that your financial data stays relevant and actionable. So, there you have it. The chart of accounts is a crucial foundation for any accounting system. It provides the structure necessary to organize financial transactions, allowing for clear financial reporting and better decision-making. Whether you're a student mastering the basics or a professional fine-tuning your financial strategy, understanding this structure is key to success in accounting and finance. If you found this video helpful and you're ready to take your accounting skills to the next level, don't forget to hit that subscribe button. At Education Bench, we're dedicated to helping you master essential accounting and financial concepts. Make sure to turn on notifications so you never miss a video.